Um, I'm going to talk about mainly the prospect of the Korea economy. I will provide you some background of the Korean economy is facing in globally, and then I will talk about some kind of interesting topics of the financial market, especially in FX market. I think that affects shipbuilding and the financing industry very much. So I will talk about the FX market mainly. Most of after there was some shock by the tariff by the Trump in April. All the economy was concerned about the growth. We thought the economy is going to be really horrible in 2025. But after we gone through the first half of the year, economic performance was not that really bad. Actually, some countries are actually performing far better than we have expected. We think it's because with the concern of the tariff, every country was trying to front-loading their production. So because they are so concerned about the tariff, they expedite the production in first half. That actually caused better performance of the economy in the first of the year. And second thing is there has been some AI innovation and AI-related investment by the many countries that actually helped the increase of the investment, which has supported the economic growth. So I think more or less we see more positive side of the story of economics in first half of the year, but eventually we have to pay the cost of the tariff, and that is going to happen in second half of the year. So we think most of the economies will slow down in second half of the year, and toward the early next year we have to pay the cost of the tariff. So U.S. has been growing around a 3.5% level in second quarter, but in next year we think it will slow down to mid 1% level growth next year. And China has been growing over 5%, but we think they will slow down 4% level in toward the end of the year, and we'll see less than 5% growth in 2026. So because of the tariff, even though we have not seen it as yet, we'll see the cost of it, and there will be some shock because of the tariff. So looking at Korea's overall growth, as you can see in left-hand side graph, you can see Korea's potential GDP has been falling. Korea used to grow 5% in early 2000, but now Korea is growing less than 2%, and we expect that growth is going to slow down further. It is mainly because of the declining population, and as you can see in right-hand side graph, Korea's fertility rate is really low. Fertility rate is only 0.75. So the population is declining, and also the productivity has not been growing either. So if the population is declining, the productivity has make up the declining population, but we have not seen the productivity growth. If we see some AI related the productivity growth in coming years, that is going to be positive, but we have not seen it yet. So even though we all talk about AI and ChatGPT and its contribution to economic growth, we have to monetize it. So most of the benefit we got is used as a free, and that will take time for us to monetize the AI innovation, and that actually contributing the growth. So we have not seen the productivity growth as yet. And this is a very interesting. If you see this is the capital contribution. Capital contribution has been declining, and I think I am very concerned with the contribution of the capital. Korea has been committing to invest $350 billion into the U.S., and I think that is on top of the current investment by the FDI. Like Korean firms has been investing over 40 billion out of Korea to build the industries, and we have to spend additional like 20 billion a year just in the United States. So there will be a lot of capital outflow. So meaning capital investment in Korea is going to be less than we used to invest. So that is going to be negative for Korea's like a potential GDP. So population is declining, capital is going to decline. So unless we have a huge productivity growth, Korea's potential GDP is going to continue to fall. So even though all the good things about the Korea's like AI innovation, semiconductor, MASCA, we are not sure how it's going to benefit Korea's like a potential GDP. So we need to have a more strategic kind of a stance toward the investment in coming years. So probably that's why Korea's like a GDP has been showing negative GDP. We came out 2 days ago. We have the Q3 GDP. Actually, it has grown 1.2% quarter-on-quarter, and year-on-year was around 1.5%. So it was actually 1.7%. It was actually better than the market expectation. So probably GDP gap is narrowing. So the GDP gap was like widening, but it will narrow. But still, like we will see like a negative GDP gap, which means like 4 quarters of almost a year of negative GDP gap, and that is going to be a bit of a concern for Korea's economy in coming years. So in recent data shows some positive trajectory. So we see some signs of the industrial production and retail sales and improving just here, this part of it. So, but we are not sure whether they can be sustained. So I think since the new president comes in, like he has doing some more driving for domestic consumption, providing a bit of the free money to every household. That has been helping the consumption, domestic consumption and retail sales. So we have to see whether that is actually just ignite the market, and then the market itself create its own consumption. Not sure whether they can be sustained, but we'll see. Like for the third quarter, we see some positive side of the story of the government policy. So that could be a bit of a positive story. And the export has been pretty kind of stable, but do not see the positive side of the story here, but considering strong export growth last year, this year export is actually doing okay. I think probably because of the front loading, export has been pretty stable, and also semiconductor has been doing really well, and especially like HBM related, the AI related semiconductor has been very strong, and that has been driving legacy demand for the semiconductor. So that has been pretty positive for Korea's like export sector. And job market has been pretty resilient. So that's a bit of the mystery, because the economy isn't good, but the job market has been very stable. I think it's probably because of most of the jobs created by the like more or less like service sector jobs, not kind of value-added jobs. So like more or less service sector jobs and taking care of elder people. So, and most of the jobs are coming from the over 60 and female side. So, which is not a really positive for the health for the economy. So, job market is doing okay, but it's hard to say, yeah, that's very good growth of the job market. And leading indicators are showing very showing a bit of different graphs. So for example, leading index is saying economy is picking up here, but the concurrent data, current data, people think, okay, future is going to be okay, but today is bad. So meaning the economic data is showing some opposite direction. So hard to say economy is actually supporting the sentiment, positive sentiment as yet. I think Korea maybe has a positive sentiment because Korea equity market is doing really well. So Korea equity market was, I think, around 2,500, 2,500, is now over like a 4,000. And now market may think like it can go up to like a 5,000 as the president has mentioned. So if so, like equity price is rising and people feel got richer. So that can make see the positive of the economy, and that can worse effect can drive up the consumption. But that is early stage of the economy. We have to see how actually it develops. So as I say, the sentiment is still remain weak, even though there is some positive side to the story. And main reason is the construction sector is very low. So even though the construction has been consistently on pre-ordered, the actually completion has been declining. So I think it probably rising housing price. Even though we say the house price is rising in Seoul area because of the real estate price, but actually the construction itself has been very limited. Like supply in Seoul area is limited. That means like construction investment is limited, and that is not helping the GDP component perspective. So I think right now for the construction to increase, real estate price in non-Seoul area where you can actually supply has to pick it up, but the housing price non-Seoul area has not growing. So only Seoul area and the metropolitan area has seen the rising housing price. So that kind of difference is going to be a bit of a problem for the construction side. Inflation has been very weak, so meaning indicating demand is not strong. So as I say, aligned with my kind of suggestion of sentiment, it remains still weak as inflation shows still benign. And external sectors are doing, as I say, doing quite well as because of a front loading. So which means probably we have not seen the worst of the tariff as yet. So we'll see the cost of the tariff in coming months. So need to be watchful of the incoming data. In the meantime, fiscal burden is rising. I think the government is spending more, and if the government spends more, which can drive the economic growth, but there is always a cost. Like they have to collect more tax, or they have to borrow more. Like it's hard to collect the tax when the economy is slow, so they have to borrow more. So if they borrow, the borrowing cost may go up, will drive up the interest rate. That is usually not good news for the small, medium enterprise because the interest it will go up. So that can crowd out the government's like spending. So we'll see how the crowding out effect versus crowding in effect is going to affect the Korean economy in coming months. As I say, housing price is rising, but as you can see, this is the Seoul area. This is non-Seoul area. So Seoul area housing price is rising, but non-Seoul area housing price is not rising. So which is going to be a concern. Okay, I'll skip here. So like for the considering slow growth, like a Bank of Korea need to cut the rate to support economic growth. But Bank of Korea has been very reluctant to cut the interest rate because if they cut the interest rate, it's going to increase household debt all the more, and which is the concern for the Korea's like big concern, and that can cause slow down the economy. So because if people is on high debt, they will have less money to spend. They're just busy paying debt to debt. So for Bank of Korea perspective, they cannot easily cut the rate. That will going to increase household debt. The reason household debt is increasing in Korea is mainly because of housing price is rising. If the housing price is rising, young generation try to borrow the money to buy the house because they are so concerned about the rising housing price. So for those kind of financial instability is going to affect the Bank of Korea's decision for cut the rate. But then if you see the right-hand side graph, it is quite okay. I mean, even though there is concern for household debt has been actually performing better than the projections, which means like even though there is concern, it's not going to develop into the financial instability and financial crisis. So I do not think like Korea's household debt is a problem, but it's not going to cause any kind of immediate financial distress and cause like a financial problem in Korea. So we already see many macro-prudential to fight back, and we'll see how it's going to impact the Korea's economy. As I said before, Korea equity market is booming, and there are some measures on the way, and if with those measures, probably Korea equity market may do better than for now. And let me just talk about the Korea won movement. Korea won has been around 1440. It came down to 20 yesterday, right after Korea and the U.S. strike the tariff deal. But the Korea won has been performing worse than its historic standard. Because DXY is around 100, actually less than 100. So Korea won should be around 1200 and 1300 level. But Korea won has been around 1400 level. So which means like a Korea won is underperforming, performing worse than other peers. Why? It's because Koreans are investing too much out of Korea. So Koreans are buying too much U.S. equity, like retailers. They are buying the Apple, Nvidia, and more than they buy the Samsung Electronics and then SK Hynix. Now, the foreigners are coming in, so foreigners are buying a lot of Korean equity as the Korea's Kospi is rising over 4,000, but still Korea won is underperforming because Koreans are buying more foreign asset than foreigners are buying the Korean asset. So I think this trend probably will change when they see actually Korean equity market performs better than the U.S. market. I think right now Koreans think this is opportunity to sell Korea and buy U.S. because the Korea equity price is rising, and U.S. market has overperforming Korea for almost 15 years. So I think people think, at the end of the day, even though right now Korea market is booming, Korea market is a bull market, but no guarantee it can sustain the next year. So they think it's safer to sell Korea and buy the U.S. for now. So I think that's why, even though the Korean equity market is doing really well, Korea won has been underperforming. Another reason is FDI has been increasing. As I said, Korean firms usually invest around 20 or 30 billion a year out of Korea investment. But it has been risen around 40 now. And I think Trump is actually trying to push Korea more to invest more. So it may go up to a 60 with 20 billion additional dollars, which means Korea has to buy around $60 billion to invest out of Korea. Our current account surplus is around 100 billion. So out of 100 billion, if the FDI increase this fast, we are going to be short of the dollar because Korean firms has been the source of the dollar supply, but they may have to use all the money they make through the export, the investment in the U.S., which means dollar supply is going to decline. So Korea won level has been around back to 10 years, Korea won was around 1,100. So if Korea's exports are doing well, then we thought that Korea won may break a 3-digit. Went up to 1,200, 1,300. Now is near to 1,400. If the Korea has to sustain this kind of the outflow, the 1,400 may become the new norm for Korea's exchange rate. I think only thing we can break this pattern is one of the big outflow is the NPS. National Pension Fund is buying a lot of equity, and if they buy with the hedge, they can hedge up to 15%, strategic hedging 10, tactical hedging around 5%. They have not done it yet. So if they do, I think there is some tool for Korea to defend the Korea won. Think about it, Bank of Korea has around 400 billion in their reserve. MPS has over 500 billion US, the foreign asset, like a dollar asset. So their hedging policy can change, impact the Korean won quite a lot. So I think there will be some change. Maybe we see some change of the MPS, like adopting Japan or Taiwan's like a national pension fund for their investment. Like if they can increase their investment portion or domestic share of the equity investment, if they do, then it can change the significantly of the Korean won level. So I think you need to monitor what's the news on the MPS and the government decision for the strategic decision, and that is going to impact the Korean won. Otherwise, I think if you just see the supply and demand, I think the Korean won is going to be weakened, even though Korean equity market is doing really well. So you may see contradicting news. Equity market is booming, but the Korean won is going to remain weak. So I will stop here, and if you have any questions, please come to talk to me. I'm going to be in outside. Okay, thank you.